Well, thank you very much, Tim. I really appreciate the kind words, and we were finally able to pull this off. I think I started with Wayne back in October of 2016, and we had a hurricane. And then the next year, I think about the same time, we had another hurricane. I had some personal issues that I had to attend to, so I couldn't make a couple of others that we've scheduled. Wayne has turned this thing over to David, and David was kind enough to say, hey, we're going to make it this time. And so I'm delighted to be here today and have a chance to talk with you. Since this is the Ring speaker series, I just wanted to start off. I was here a long time ago, and I studied under Dr. Ring. I don't know, Wayne and David, did you have a chance to meet Dr. Ring when he was teaching? So you kind of know the personality. He was a great instructor. When I had Dr. Ring here, his focus was appraisal. And I always say there's two major lessons that I learned I received an MBA with a concentration in real estate. And the first one was appraisal theory, and it's served me well over the years, because anything that you do in real estate, you start off with the value. If you're going to try to buy, sell, lease, option, finance, the initial skill set is figuring out what is this thing worth today, or what is this thing worth when I do something to it tomorrow, and create some value. A little bit about my background. Tim covered a few things. I was born and raised in Iowa. I was the first one in my family to go to college. Majored in accounting and finance. And my first job out of college, I worked in the accounting department with Owens, Illinois, which is a national packaging company. Toledo, Ohio, headquartered. They sent me down to Valdosta, Georgia, which is the first time I had got across the Mason-Dixon line. And I spent about 6 months in Valdosta, Jacksonville, and Atlanta in a variety of training assignments. Basically what I did was I worked in the accounting department. But as I mentioned to some of the people, one of the tips that I have, when you take that first job, you obviously have to do what you have to do in whatever your major function, but look around and see what the other people are doing and how it fits into the overall. And when I was working with Owens at this gigantic paper plant, we made kraft paper, which goes into grocery bags and cardboard packaging. I found out it was a very complicated process and a very interesting one. So it showed me a lot of things that you can do for extra credit and round out whatever job that you're doing. I was ROTC out of Iowa State, so I told Owens, Illinois that I'd only be there for 5 or 6 months, and they said, that's fine, we'll take our chances. So I had an 8-year obligation. In those years, they had the draft, 2 years of active duty and 6 years in the reserves. My first assignment was the Army Aviation Materiel Command in St. Louis, which is kind of interesting because I've never really had a government job before, and even though the Army is a government job, it's different. This was an office building in downtown St. Louis, 1,000 Department of Army civilians, 50 military, headed up with a brigadier general ran the place. And our job was to do the research and development and procure Army aviation equipment and weapon systems. So we were doing the research and development, figuring out what to buy. The department I was in was programming, if you buy 1,000 helicopters, how many do you need, how many extra parts do you need for maintenance? And we were in the early stages of the Vietnam War, casualty damage. So we were trying to figure out what the production run would be in producing the new equipment and the spare parts. It was kind of an interesting job, and from there, I went to the 7th Infantry Division in Korea. We were up on the DMZ. I lived 13 months of my life in Korea. This was a totally military assignment, and it was one that certainly today, a lot of people come up, and when I told them I served in Korea, usually people weren't that interested because there was some more exotic spot that they wanted to talk about. But they come up today and ask about, the situation that's going on in Korea. And I'm not going to get into that at all, but it's obviously been 60 years that we've been in Korea and that we've had a military presence there and will probably continue for the foreseeable future. All right, Tim, I'm trying to press the right one. There we go. While I was in the military, several of the officers that I affiliated with were in the real estate business. And they got me interested then when I went back to civilian pursuits that real estate would be a good area for the skill set that I had. So at the end of my tour, I looked around for colleges, universities for an MBA program. And because I had lived in Valdosta and parts of northern Florida, decided I'd had enough of the ice and snow in Iowa, maybe it's time to get a little warmer climate. So I joined the MBA program at the University of Florida. Again, had a concentration in real estate. And I mentioned before the one thing that I learned from Dr. Ring, which was the appraisal theory. The other major thing that I received when I was at the university, or the point that I really, that stood with me, was the Western Electric. This was in a management class. Western Electric was a large manufacturer of telephones back in the 30s. And the case study basically was the industrial engineers wanted to figure out what it would take to increase production in this plant. This is a big plant, 2,000 people. At one end, raw material would come in, and the other end would be the dial, rotary dial black phone that was so standard in those days. So what they did is they divided, they had two groups of test people. One group, they basically retrofitted their area, better lighting, new equipment, paint job, made it as user-friendly as possible. Then they had a control group that they didn't do that, but they measured all of their performance, talked to them about what they were doing, asked them their input on how can we do our job better. And then you had the rest of the plant. And the bottom line from this study was that they expected the area that they spent all the money in would do the best, and it did, but barely above the other group that they did nothing but encouraged the people to discuss what they were doing and how they can do things better. And then you had the rest of the plant. And the two areas where management got involved with their employees had far better productivity than the general run of the operation. And of course, the lesson learned was by working with your people, managing people well, you can get more from them. They'll feel better about their job. Your turnover will be less. That was kind of the management example, and I've applied that in a number of situations throughout my career. About the time I was graduating, I went to the career service area for some job interviews, and I interviewed several companies, and IBM came to town. A gentleman from Jacksonville, and he sold computers, big iron as they would call it in those days, and he also had a group that did the electronic typewriters, so I'm going back a few years on that. I told him I was interested in the real estate business, and I knew that I had done my research that IBM had a real estate and construction division, and that's what I was interested to see if there was any openings. And he says, yeah, I think they've got somebody up there. I'll check on it for you, and I'll send them your resume, and hopefully you'll hear back from them. I wasn't really that encouraged, but he did what he said he was going to do. He sent my application in to the real estate and construction department. I interviewed in New York, and then I interviewed in Chicago, and they offered me a job at the Chicago regional office. And we did all the real estate transactions for IBM, primarily office leasing, and we also bought land and had some development sites where we were building plants and distribution facilities. So I show up day one to IBM. You fill out all the paperwork, they introduce you to all the people. Then on day two, you have to get down to work. And of course, I was an analyst, and I was sitting out in the bullpen area. And they assigned me a guy, His name was Jack Bechtel. And Jack is like a lot of people in companies. He'd been there forever. He wasn't a college graduate, but he had learned the financial operation. He knew where everything was buried. If you had a question, you go see Jack, and he would tell you, what was going on. So I was sitting there talking with him. He said, "Why don't you go get a cup of coffee, and I'm going to tell you the secret of IBM." And I thought about that. Well, so I went and I was getting my coffee, and I was saying, "Wow, what a lucky guy I am in. I've been here 36 hours, and I'm going to find out from somebody what the secret of the largest, most successful industrial corporation at that time, early 70s, what they do." So I come back, and Jack starts to explain basically what public growth companies generally do. I think it's all legal, but they had a management system where the salespeople were highly incentivized. They would get bonuses, and they had something called the 100% Club. And if you made the 100% Club, you were in. If you didn't make the 100% Club, you were sort of out, and you better not miss it 2 years in a row. They would throw a big party in Hawaii. They would give everybody awards for their performance, highly incentivized to make the sales numbers happen. The second part of this is, being a growth company, they wanted to show certain earnings. So what IBM would do, and a lot of companies I've learned since, I thought I was getting in on the big secret, they basically determine what their earnings are going to be, and what's left over are the expenses, research and development, the payroll, the housing operation, which we were involved in with the real estate. So I said, boy, that is really amazing. These guys really know what they're doing. So I started thinking about it a couple of weeks after this, and I said to myself, this is not really brain surgery. What it really amounts to is everybody, they had a plan, and everybody in that company knew what they had to do to make the plan, from the receptionist all the way up to the chairman of the board. And Jack, who was about 10 levels down, was a part of that, and he knew exactly the performance numbers that he had to hit on the expenditures that we were doing. So I thought that was a very insightful way of how management can go all the way through an organization and get results. Now let's talk a little bit about our subject today. Wealth. And I'd like to start off and say that I don't think wealth is the most important thing. When you compare it to your personal health, family, friends, relationships, those are all very important things in life. And I think when I graduated, I wanted to be successful, but not necessarily wealthy. And so in looking at my career and what I've done, I've tried to sort out some of the things that were helpful for me from a wealth building investment basis. And the first one is back in the 1700s, a Scotsman, an economist called Adam Smith. He wrote a lot of things about a lot of issues. But he said that wealth is not exploitation, but new ideas that are financed by individual sacrifice. So the idea was that these new ideas not only make the individual generally wealthy or well off, but it benefits society as a whole, and then we're all a lot better. So let's talk about some of these, if I can get to work. Let's talk about some specific examples of new ideas and wealth creation. Microsoft and the Internet operating system. Bill Gates is one of the wealthiest guys in the world. He does a lot of good with his foundation and charity. But when you think about it, we're all wealthier today, all of those that use computers. I have an office in the Keys, I have an office in Chicago, all hooked up with electronics. I can keep track of a lot of things, not everything, but most things. And I think we're all a lot better off by having this kind of an idea. Fred Smith, Federal Express. Fred was a jet pilot in the Vietnam War, came back and said, we need to have a better delivery system. If I'm in Los Angeles and I want to send a package to New York, I've got to depend on the post office, and that can be very iffy. So he formed Federal Express. Obviously, he's done very well, but he certainly provided a service that a lot of companies depend upon. Don't have to talk much about Amazon, Jeff Bezos. I heard the other day he was the richest guy in the world, 120 billion. He's probably not thinking about it that much. But he obviously has changed the way things are distributed. You can live in remote areas, and the UPS truck is never far away from a package delivery. Again, he transformed an industry and made a lot of wealth for the people that depend on it. And one of my favorites, because if there's an investment style that I like, is Warren Buffett, the value investment guru. Warren has really, when you listen to him, he makes so much sense. He's in his, I think he's mid or late 80s, and he still probably writes the best investment letter. If you ever have a chance to read it about what's going on with the economy, what's going on with the companies he's invested in. And you know, his thing is buy and hold. Buy a good company with good management and grow the business, and he's done it to a bunch of them. Not everything works, but most of them do. And he's had a very successful investment history. I think what he does is a good example of new ideas. You create individual wealth, and then society benefits from that growth. So let's get down to maybe wealth creation strategies. How do you get started? Well, to me, the first step is education and a job. And you guys, obviously I'm preaching to the choir. You've already figured that out. You're getting a great education. You're in a great field, and all of you are going to have a great job in a few months. And you have to get started some way. And most of us don't start with a lot of money to invest. I'll give you a story. You know, you have these little things that happen as you grow up. In about 6th grade in my grade school, they had a savings bond contest. It wasn't so much a contest, but they were promoting buying savings bonds. And they passed out to all the kids these little cards, and you'd put quarters in, and when you got to $18.75, you could trade that in to your teacher, and she would arrange to have a $25 bond sent to you in your name. And I thought that was pretty amazing. Now, you know, obviously it wasn't worth $25 the day that I handed the card in, but I saw the idea that if you saved money and you invested it, eventually you would have more than what you put in. And I think that sort of stayed with me, and it became the fundamental about just saving money. Saying that, I think some people have a difficult time saving. I think that probably the savers are a minority compared to people that have difficulty. But I think it can be a learned thing, and it's very important that when you have the first job, you set aside some money that you can and put it into a safe account, savings account. You don't get much in interest, but eventually when something comes along that's interesting, then you've got the wherewithal to take advantage of it. Just to give you an example, I mentioned this at a previous gathering today. My first real estate investment was buying a house. My wife and I were living in an apartment in Chicago. We had one child, one on the way. It was time to buy a house. Fortunately, one of the perks that IBM had was you could buy IBM stock at a discount, up to 10% of your salary. So I was buying as much as I could get. Fortunately, the stock was increasing in value. And when I decided to buy a house, I needed to put up a 20% down payment. I sold my stock, and that became the basis of my first real estate deal, was a house. It worked out nicely, but you know, the reason I was buying a house was we needed more room and a place to live. Your choices really, when you come to investments, are, I sort of divide it into public and private. Most people start off by buying no-load mutual funds. That's what I did. It's easy to do. Go to Fidelity, go to Vanguard, all kinds of different places, Schwab, where you can start by saving money. Usually goes into a money market account. and then you can go into mutual funds that you think are appropriate. And I still do that to date. I have a group of no-load mutual funds, even though now I have some money managers that really know what they're doing. I think I know what I'm doing, but I've had a pretty good run with the mutual funds. Private, when I was working when I left IBM, I went to work for JMB Realty in Chicago. JMB was in the real estate investment business, and we had funds where we would bring in outside investors, private money, and we would buy diversified portfolios. And as the general partner, JMB gave part of that general partnership ownership to individuals that worked in the company. So it was a way for us to build up some sweat equity. And I didn't have to do that, but I obviously did it to the full extent. And over the years, I was able to accumulate interest in these partnerships that eventually the properties were sold, the distributions went back to the investors, and that provided me with some additional capital. Tax planning. You really have, when you're an investor, you have a partnership with Uncle Sam. He wants some of it, and he is due some of it. I don't have a problem. And I find that you want to stay on top of your taxes, and probably the most important thing is the planning part. Otherwise, think ahead. One of the advantages of real estate is that you can have distributions, cash flow distributions that can be sheltered by the depreciation. So it's a way to build equity up in a property or be able to take money out of a property without a tax consequence. Eventually, when you sell the property, though, you're going to have a capital gain between the sales price and the adjusted basis. But as you get into various types of investments, some of them have more tax advantages that you can use to help build up your wealth. Asset allocation. I basically do three things. We'll get into the ratios in a minute, but I do private equity, private real estate, and public markets. I like having a mix. It requires that you have different skill sets, and it probably takes a little bit more time to keep track of different things. I started off with private equity or a private real estate and moved mainly into the public stock markets, and then eventually I got into the private equity program, which I found was a great diversification. And then last, the diversification really has two parts to it, the different types of assets you have and their locations, especially in real estate. I have a major apartment portfolio, and we have programs that are in New York, Chicago, Texas, one that's a national program. And I feel comfortable with that kind of a diversification because if the oil business in Texas takes a hiccup, maybe I'm going to lose some occupancy and return there, and other cities will not have the same kind of problem. So it works back and forth. Let's talk a little bit about the stock market. And this one I did when I was getting ready for October of 2016. You can see over on the right, it goes to about Brexit. But I like this chart because I think it shows a lot of things. Now, first of all, it's history. It doesn't mean that this is going to happen into the future, but it gives you some perspective of the ups and downs of the stock market. And you can see there that we've really had two major adjustments, downdrafts. The Great Depression in the 1930s, and then you had the Great Recession, 2008, 2009. The other thing that I think comes off, you can see the green is less than the white. That is, the market is increasing more of the time than it's decreasing. And I think that's good to keep in perspective when you have turbulence like we've been having the last few days. The other thing I'd like to point out is if you look at the ending of the Dow Jones Industrial Average in June of 2016, it was 18,300, let's say. Today it started off at 24,009. Tim informs me that it dropped about 800 points, so let's call it an even 24,000. But for an 18-month period, you've obviously had a big swing up in the value of the market. Stock markets move, they probably overcompensate on the upside, and they, on the downside, they have swings either way. It's probably not as good as it is, and it's probably not as bad as it is, and that's probably the situation we've got now. Another thing that I like to point out is, let's say you're an unfortunate investor and you went into the S&P 500 on October 9th of 2007, which was one of the worst times, it's a high point of the market. And let's say you didn't do anything for 10 years, just kept the money going. At the end of 10 years, even though you went in on the worst day in modern times in the market, you had an annual return of 7.2%. So buying and staying the course in many respects in a diversified portfolio, I think makes a lot of sense. The other interesting statistic, over the last 100 years, bear markets have averaged about a year and a half, which doesn't sound real good right now, but I don't think we're in a bear market. And they've had a drop of about 40%. The bull markets have lasted a little under 9 years and have gone up over 400%. So keeping that in perspective, I think, makes a lot of sense. The public markets vacillate a lot more than the private markets, and one of the reasons why I feel relatively good about being in the market right now is I can look at my private equity and my private real estate, and nothing has really changed. And for that matter, the public companies. Has Caterpillar changed in the last 2 weeks? I mean, they're still selling their machinery. They're still booking tremendous earnings. So it's really, I think, a market correction, and we've seen those from time to time, and that's what the history of the market shows. Now we got chart number 2, if we're doing this one right. Uh-oh. If you can get me to the next chart, I'll let you handle the technology. Now this is one Tim did to bring us up to date, and it kind of shows the story in a little different way, and I think it's really relevant of what's happened from about 1980 in the public markets as things have really shot up. And again, this is the Dow Jones, and you can see even 4 or 5 years ago, it was a lot lower than it is today, and you can see the spike where you've gone up really, as I said before, from 18,000 to 24,000. It looks like it's probably going to come down, and it's probably going to be a correction, but it'll probably be higher than it was, in a 5 or 10 year period. So I think it's interesting to keep that perspective in mind when you're investing. I know a lot of people that they took the hit in 2008 and 2009, and they're proud they have not been back in the market. They've obviously missed a major run-up in valuations. So, Tim, I'll let you continue on. Now we'll shift that was the macro part. The micro is a friend of mine. I haven't done much with Sam in recent years, but he's an icon in Chicago, major investor, has a couple of major real estate investment trusts, and does a wide variety of investing. And his motto is, I don't buy anything without an edge. And I have that on my desk as well at home. And the idea there is you're not looking for average stuff. As an investor, you try to look for niche opportunities where you can outperform the general market or avoid as much risk as possible. And just to kind of give you an idea, I have a partner in Texas. We do fixer-upper apartments. And we've done 6 deals, and kind of the pattern of what happened, this one happens a lot. The guy, poor management, not paying attention. We were able to come in and buy it at a lower price. Guy was getting a divorce, needed money quick. We were there. We saw the potential in the property. Health problems, somebody gets sick. Obviously, he needs to probably not have the operating burden of a property. Again, we can provide liquidity. The last one we did was the family feud. The mother and the father were at it against the daughter and the brother. And they just wanted to get away from one another. And again, instead of going to an auction, we were able to tie into the deal and said, hey, we'll just take you guys out. We'll give you a fair price. Of course, the fair price was one that we thought was very fair. And we got a nice opportunity. And then, of course, you have the ones that are foreclosure, bankruptcy, over-leveraged, and lender problems. I mean, these are all things that happen out there. Even when things are relatively good like they are right now, you'll find opportunities if you look around, and those niches are what I really try to do. Let's talk a little bit about Bergstrom Investment Management, and then we'll open it up for questions, which I think is always the best part. I operate basically a family office with my daughter, who's also an MBA graduate of the University of Florida. We use our own capital. This is money we've saved over the years and have been able to roll over from one investment to the next investment. Our asset allocation strategy is kind of simple. I just kind of liked it because I started off with private real estate. I moved into the public markets and then got into the game fairly late with private equity, and I like it a lot. Right now, my portfolio is not as good as it should be because I'm overweight in the public markets, mainly because of the run-up in the last 2 years. I'm probably about 50% in public markets. So as we source good real estate and private equity deals, we'll probably reallocate into that category. We try to be reasonable in our expectations and not take on much risk or lesser risk. There's always some risk. And we're shooting for 12% pre-tax, 9% after-tax on an unleveraged basis. Most of our portfolios are leveraged, non-recourse, and we get 3 or 4% if you add onto those numbers is our normal expectations. We're shooting for mid-teen returns in both private equity and real estate. In the public market, I'm really happy to have high single digits, and we've been able to do that in the last 5 years. But there's a lot more rock and roll that you have to live with, like the times we're going through now. We have multiple properties within each strategy, or multiple partners within each strategy. I've got 4 different private equity funds that we're in. We probably have 6 different real estate funds that we're in, plus a direct deal in Texas. And then I have probably a half a dozen money managers split between the no-load mutual funds, which are really not a money manager per se, and individuals that pick stocks for us. I've always put a lot of emphasis in the quality of the people I work with, along with their ability to come up with good returns. Most of these people I know personally. I can call them up and say, what's going on, or what do you see happening with Atlanta apartments or wherever I'm at. And that's kind of the way we work. And now what my daughter and I are really doing is we're managing the cash flow of things that are being sold, and they come back in, and then we recycle the money into new allocations. And hopefully can continue to do above average returns. So that's kind of the Bergstrom Investment Management story. I've been doing this really for about 40 years, starting with IBM as an employee, and I moved to JMB, and then about 23 years ago, we formed Bergstrom Investment Management and sort of did the private office thing. So I'm going to open it up and let you guys ask some questions. Yes, sir.
So over the course of your career, have there been any favorite failures or apparent failures that have led to a later success?
Yeah, the broader question is, have you lost some money? And I certainly have. And anybody that's been in the business as long or does, as much, will have your losers. I would say the biggest thing, I've been pretty good on locational issues, but we've had a couple of, in the private equity field, over-leveraged properties that we in effect had to sell off at a loss. And you try to minimize that as much as possible, but you can't be too careful. And one of the reasons what we've done to mitigate that risk, we like funds. Even though you're paying a general partner a piece of the upside, we find the protection if you buy 10 properties or 10 private equity deals. A couple of them are going to do real well. Most of them will be average. And you'll have maybe a couple of them that don't meet expectations, but you'll average out a pretty good, a decent return. And like I say, we use managers that we've had success with over the years, and it's been a real key to our operation. Yes, Cody.
I just want to understand your strategy better. The third that you're invested in private equity, is that specific to real estate only, or is that like VC?
Yeah.
Are you getting involved in businesses?
Yeah, private equity, the way we define it, would be niche manufacturing and service companies. Some of them have real estate, but it's more on, they make a widget, and we're betting that that widget can be improved upon, can be marketed better. Capital can come in for more labor saving or cost-effective production, things like that. The same thing on the service side.
Okay. So you're a third of private real estate is
That-
part in funds,
Yeah.
private equity real estate funds, and part your own deal.
The way we classify, and some of the real estate is direct, some would be through funds, but as a total of the entire portfolio, we're shooting for a third. Right now, we're probably there in private real estate, but in private equity, we're light, just because we haven't been able to get the money invested fast enough. I don't do private equity direct. We did a deal at JMB that worked out very well, but mainly because of the expertise that's needed. If you got a manufacturing business, you got to have people that know what they're doing there. And my skill set is pretty much on the real estate side, but I like the diversification of risk by going into it. Gentlemen.
I know you mentioned that Warren Buffett was an inspiration for your investment strategy. Was there like a specific moment or transaction in your career where you knew that was the strategy that would be like the most beneficial?
I caught about half of that.
I know you mentioned Warren Buffett as inspiration for your investment strategy, but I was just curious as to if there was one moment or transaction or maybe series of transactions that made you realize that that was the investment strategy that was like worked for you?
That's a good question. And what he's saying is, was there a light bulb that went off? And I kind of drifted into this. I wish I could say I really figured it out one night, with some deep thoughts. But I had a lot of real estate. I was going into the public markets mainly for my liquidity reserve. Otherwise, if I had to raise some money to do an opportunity or backstop a private deal, I could do that with the liquidity of the public market. And as I sort of went from private real estate and public market, I got interested in private equity, and I decided to make that, another third of the equation. The private markets give me a perspective on the public. We're all disappointed when you see the market jumping around like it has the last couple of days. But the private deals, I don't think anybody left our apartment complex. I don't think one of my tenants left the office building in the last week or so. They're still there paying the rent. The money is coming in. Not much has changed. And that's really true in the public markets. They're operating too, except the stock is gyrating a lot for whatever reasons, and we're still trying to figure out why. So there wasn't a light bulb that went off. I think, the more I talk to people, they say, well, that's a great idea. I said, well, it's one third, one third, one third. It's not rocket science. But for us, it feels right. And I was fortunate really to stumble on one major fund in Chicago on the private equity side and a couple of other guys that have done extremely well in it. It's a very broad field, and I don't pretend to be an expert in that. But it's worked out well for us. I think you had one too.
Yes, sir. If you're going into a full commission job like brokerage, where your income is not necessarily a given, what percentage of your income would you allocate to savings or investment?
Yeah, that's obviously a different thing. When I started off, I had a salary. So I could say I'm going to save 10% a month or whatever it was. In the case of IBM, I was able to buy the stock. I think you have to save for a rainy day and have a safety net. On the other hand, usually when you're on commissions, you have the opportunity to make additional compensation, maybe over and above what most salary people do. So that's the trade-off. And it's really a lot the way we invest. We always try to have plenty of liquidity that if something happens, we're able to backstop. I'm doing a shopping center, and we're going to call a different name now. It was the Marshall Mall. We're going to call it Marshall Place. Retail is out, multiple use properties are in. We still have a retail mix, but we also have office and we have a college in there. So we're changing the name, but we're going to have to probably put more money in than we thought. It'll require more cash, but we're getting a great valuation out of it. So you have things that come up, you just have to manage your cash. But yeah, if you're on a commission-only job, then you've got to sort of wait for the first couple of deals to come in and probably hold a little bit more back for living on. But eventually you'll get to the point where you have some excess, and then it's time to think about maybe a no-load mutual fund, you get in the stock market, or an opportunity comes along where you can deploy that cash. What I find, a lot of people that I know, they're a lot smarter than I am, and they work hard, but a lot of them are afraid to pull the trigger. They get nervous about the market, and a lot of that is I think I was nervous too when I was getting started. I had a wife and 2 kids, and what would happen, if you lost your job or something. But you have to sort of go beyond that and take a look at some of the charts that we're talking about and what the market has historically done, and do your homework and feel comfortable. Well, I really checked this thing out. I think it's going to work out, so I'll take that chance. And the first couple of deals, you wrestle with yourself. My wife always kids me about our first house. I mean, this was a $36,000 house, Northfield, Illinois, 1973 or whatever it was. And I put $8,000, but the $8,000 that I had was in the house. I had nothing else. It worked out fine. But she said, you didn't sleep for 2 nights after you did the deal. And I was worried about, the plumbing doesn't work, or the dishwasher is not going to, all the things that you worry about when you buy your first house. But you get through it, and you work your way through. And then I think the big thing is, if you can save some extra money and set it aside, there's saving and there's consumption. And a lot of people have a consumption or a spending problem. And if you can kind of, you don't have to take a lot, but you can take something every month and put it away, then when the opportunities come by, you're ready to be able to do something. In the back row.
Do you have any investments outside of the U.S.?
Another great question, and I missed that in my notes. Question is, do I have anything outside of the United States? I used to say to people, I can lose money in the U.S., I don't have to go overseas to do it. But that's not a good answer today, because the overseas markets are doing very well. I really do it through mutual funds. I don't do any direct investing, and none of my funds are overseas. It's definitely an opportunity. In the public markets, I've got a couple of funds that's all they do. They know what they're doing. I'm probably a little bit short Asia, and I think I'm trying to find the right avenue. I've got a pretty good fund that does a good job with the Middle East and Europe and the Middle East. But international investing should be a slice of your portfolio when you get to that point. And a lot of the growth in the rest of the world is going to be, U.S. is a good place to be. We've always found a lot of opportunities in the U.S. I mean, we haven't been starved for opportunities, but to be diversified, you should have a piece internationally.
What were some of your hardships opening up your own firm?
Hardship in opening up your own firm. Well, it was a little easier than what a lot of people have. I was working for JMB Realty Corporation, and they decided that they wanted to start selling their assets. And one of the assets that they sold was JMB Properties Company, along with our institutional money-making business. The good news is they sold it to a New York Stock Exchange company that paid us a nice price. So I had some capital on the way out the door. But I sat around for about 6 months and tried to figure out, what the heck do I want to do? And what I decided to do is sort of what I had been doing at JMB, except with other people's money. Now it's with my money. And that is to sort of look for interesting investments, take equity positions. I've never been a bond guy. And a lot of people will say, well, you don't have bonds in your portfolio. And I say, yeah, I feel more comfortable with the real estate. and I feel long term they're going to outperform bonds. But yeah, the first 6 months, you know, I'd sit there, get to the office at 8 o'clock in the morning, I'd leave at 5:30, which was in my house, and I said, I have absolutely done nothing today. I've answered a few emails, I opened the mail, I made a few phone calls, didn't really get any traction on anything. And I learned to be patient, and I kept saying, well, I think this still makes sense. I know there's some opportunities out there, and eventually I started to click with some of my initial deals. I had some reversals. I made an investment in of all things, a collection company. You know, they collect debt, big disaster. Lost a few bucks on that one. But it taught me a lesson that I better stay with real estate and get away from other things that I don't know a lot about. Now, one of the knocks that I have, we compare portfolios, guys like me that kind of do the same thing. And they say, you are too diversified. You know, you're a real estate guy, stick with real estate. What are you doing with private equity? And you got this big stock portfolio. And I say, well, I like the diversification, and I've been fortunate to meet some great people that do a good job, and so it's worked for me. Yeah.
What was J&B's fund size when you joined and then when you left? Were they like a large fund?
No. When I got there in '72, we might have had, if you counted everybody, including the receptionist, 20 people.
And AUM as well? Assets under management as well?
No, we didn't do much management on day one. Actually, the first day I came, I had to take over an office building out in the suburbs. So we had 3 or 4 people out there. But we didn't have much of a management payroll. At the high water mark, I had 3,000 people in JMB Properties Company alone. And JMB, the parent, probably had 200, including our marketing group and our regional acquisition people. The average size of the fund, the first fund I was in, we raised $7 million and bought, I want to say, primarily residential properties. We had apartments, we had some mobile home parks thrown in there, kind of a hodgepodge. It did very well as a fund. That was our first Carlisle fund. And then we started raising bigger and bigger amounts of money. Now that's another interesting topic. And one of the things I do with the people I invest with, I try to coach them. A couple of them, I'm on their advisory board. They made the mistake of putting me on that. And unlike a lot of the advisory board members, I say things. And one of them is, don't grow so fast. You can make some money, a good living, but I've seen people that have a $50 million fund and the next one is a $500 million fund. They're pushing money out the door. They don't do their homework. It's better to grow slowly. My boss used to say, we want to get wealthy very slowly. And there's a lot to that, and you need to pace yourself on how much you want to take control of. Think about it. You've got to build an organization. You got to find the properties, and it's a lot harder to invest $500 million than it is $100 million. Yeah, you don't make as much money, and you have to have another fund, and the lawyers and the accountants, rob you blind on setup fees and things like that. But it's a better way to go, and it's better not to make those mistakes because you stay in business a lot longer. Yes, sir.
Do you think kind of the path you took to, I guess, the spot where you're at now, still can apply to our generation, kind of maybe getting into a good company to work there and, building up your career there, getting a carried interest with the firm, and then ultimately doing your own investing? Do you think that's still a viable option for us for wealth building today?
Yeah. The question really is, what I did, is that still apropos today? And the general answer I think is yes. I was really a company guy. I mean, I never really thought that much about changing jobs. It was one of these things that we came to a collective decision on, and I had to do something different. And I did a lot of soul searching on what that is. I think there's a lot of opportunities out there today in the real estate business. Obviously, you look around the technology companies, there's a lot of opportunities that are out there for people to do new things. I mean, the economy is growing. Somebody asked me earlier about, what do you think about the economy? Well, unemployment is relatively low right now. We heard a week ago that, compensation is growing, which I think is positive. If you own apartments, you want people to have a job and being paid so they can pay you the rent. I think that's all positive. Companies are reporting record earnings. The stock market is a stock market, but basically the health looks pretty good. Worldwide, other areas of the world seem to be doing well. So I think the opportunities are there. I would always trade equity for compensation as a personal preference. Now, you obviously have to have enough to live on, but if you can get into a situation, we had a great environment at JMB, starting at the top, and their strategy was, well, if we hook these people in and they have a piece of the rock, they'll do a better job, we'll do better, and we'll make out even better because of their actions. I think that's the right way to manage people. And going back to my example that I gave before, the Western Electric thing, when you get involved with your employees, I saw this in the Army as well, and you find out what's going on, you try to lead by example and show them that you care, you're going to do a lot better. And so maybe job one, you won't have a chance. Maybe you're working for a big bank, and a lot of the banks do have stock programs, but you might not have that. But as you grow and maybe do something else, if you have an opportunity to get some equity, I think it's the way to go. John.
How do you see technology impacting the real estate industry, and are you adjusting any of your investment strategies to translate that?
What is technology doing with real estate? And the answer is a lot. Now, I went to the National Multi-Housing Council meeting in Orlando in January, and they had a lot of sessions about how technology will change the way we manage properties. And of course, they were focused on apartments. All the way from how you rent the apartments online, videos. You used to have 3 or 4 leasing agents in the office. You can have a video where the guy can sit down and go to the 2 or 3 apartments that he may be interested in. He sees the inside, he sees the outside. Maybe he boils it down from 6 to 1 or 2. So you don't have to have the manpower out showing the units like you had before. It ripples through the business. The accounting side, the financial operations, direct deposit. I mean, you go on and on and on. Real estate has probably been a little bit behind the times, but it's catching up rapidly, and technology will definitely have an impact on the productivity that we have in operating property. Yes?
You've led this program for a long time, seen a lot of students pass through it. What makes some stand out over others and then be successful when they enter the professional world?
Well, the question is, I've seen a lot over the years, classes come and go. First of all, I'm impressed with the quality of people that come into the program. And I know a lot of that is due to Wayne and David and Pam and the whole team here, Tim, that we really get a high profile. And I think not only are we getting, even better people all the time, we're getting diversity, we're getting skill sets in that probably are broader than what we had before. I've always been impressed with the people that I've met at meetings like this, and really the curriculum that David and Wayne have put together. The capstone course, they didn't have that many years ago. They developed that, gives you this overview of from beginning to end. Things like that are very meaningful experiences. And I think when you go out there, nobody's going to really intimidate you about knowing more about real estate. Now, you don't know everything, but you've had a lot of experiences that you can relate to and tie in, and we've had tremendous success with graduates of the program. I think in the back row somebody had something.
From your time in the military, what is something that you learned that really helped you in your business pursuits or career?
Yeah, the military, I think the big thing in the military was the leadership. I started off, when I went to St. Louis, I was just a guy in a section of other employees. I was part of a team. When I got to Korea, then I was assigned a unit. Initially, I was a platoon leader, But the whole idea of taking care of your men, making sure that they were treated fairly, giving them the incentive to be promoted, and letting them know what they needed to do and their skill set to do that. And I just saw, a lot of other types of management strategy. And I think a lot of those ideas that I got, in the military and in other jobs that I've had have been very helpful in my career along. But taking care of the people is a multiplier. I mean, you're one person. If you have a department of 10 people and you can get all those people fired up to do a great job, and they really like coming to work and getting the job done, then you're managing a lot more. And the most successful people are the ones you see in the business that have adopted those skills. Yeah, they're talented in finance, and they have the understanding of real estate and appraisal, but they're really great leaders of people, and they get the maximum out of their people. And I say that in a positive way. And they make sure their people are compensated. Somebody asked me this morning, when we, what do we do to people when we have, liquidity events? And what we try to do, like when we refinance or we sell a property, is we have a special bonus distribution to everybody. I'm talking about the maintenance man, the leasing rep, the property manager, the regional manager. We let them know that we did okay and we're going to give you something as well. Do you have to do it? No. Do you make more money if you don't? Probably. But in the long run, I think you come out ahead, because those people are always, whether they're working for you, the next guy that bought the property, sometimes you may go back and hire them for another deal that you get in that same area. You've built those relationships, and those are priceless. Like I say, I think there's a secret of my investment success, if you can call it that, is the relationships and the managers. Not all the managers I've dealt with have worked out, and obviously you do a respectful exit and you go to somebody that can get the job done, and every once in a while we bring in a new manager who has a new idea that we like. I'm an old tire kicker. When I worked for IBM and I have to go to Akron, Ohio to renew the lease or reposition the office for IBM, I'd go out to Akron, Ohio, I'd walk 10 sites, I'd talk to a bunch of landlords and figure out what was going on. Now, what I learned when I would do that, especially in smaller towns, after about 2 days in Akron, I knew that market almost as well as anybody in town, even though I'd never set foot in the place before. Office space that IBM would be interested in, which would usually be just a few locations. So there's no excuse for that kind of homework and getting with people to find out that knowledge. They can give you a lot. Yes?
What are the type of people you like to work with?
What?
As far as character goes, or what are the attributes of somebody that you're trying to do business with?
Well, one of the things I used to say when we were hiring property management people, and hopefully I can remember everything, I kind of looked for three things. The person had to have what I call a sales personality. Now, I'm not talking he's a professional salesman, but he's somebody that doesn't have a problem explaining something to somebody and organizing his thoughts. Number two, financial literacy. Obviously, we communicate with budgets and projections and pro formas, etc. So you have to have somebody that understands numbers. There are people out there that numbers are a tough thing for them. I don't think they're here in this class. I think we probably have a great financial literacy in the master's program. And then the last thing is the managing people. There are some people that would rather work in a research lab and not have to deal with people. And let's face it, personnel things can be a big headache. I know when I was running 3,000 people, I felt more like the last guy in the human resources department than a real estate executive, because you were always doing something with somebody. Somebody had a problem. A lot of it was just getting around and making sure that people were taken care of. So those are three things I've always looked at in our business. Now, those three things will work in a lot of other businesses, but I think they're pretty important for someone that's in the real estate business. I have a backup list. Oh, okay.
Yeah, within your private real estate holdings, do you have any preference in property type, like multifamily?
Yeah, preference in real estate property. The general answer is no, but I have done far more multifamily residential in the last 4 or 5 years than I have anything else. You know, we're looking for opportunities in office properties, probably light on retail, although I own quite a bit of retail in the old JMB portfolio, so I don't feel like I'm lacking there. Industrial has been very good. I haven't done that much of it, but the focus has been residential. A lot of people say, well, you know, residential maybe is getting a little bit too hot. I think in some markets they're starting to maybe build a little bit too much, but the demographics with residential are very positive. The population grows 3% a year, whatever it is, one or maybe it's not 3, it's 1%. 3 million people a year. We got 300 million plus in the country. We're growing by 3 million people a year. They got to be housed somewhere. A portion of them will go into apartments. The demand and supply for apartments, we have a hard time building more than 300,000 a year. We might hit 350, 400, but it's not an avalanche. There are some markets where they're probably building more than they should. Right now we have a housing crisis in the country on workforce housing. I know where I live down in the Keys, you know, a lot of that was washed away in the hurricane, and they're looking at all kinds of plans to try to bring people in with some sort of government support to build workforce housing that's affordable for people, and somebody has to be serving the food and tending the bar in the Keys, or we'll go crazy down there. So you need a workforce to be there. So that's really how I look at it. There's opportunities, and we're always, you know, looking for niche opportunities that come along. Yeah, we'll keep on going. I've got a couple of other things, but your questions are more important.
So in your wealth creation strategy, you mentioned that savings and investment are two strategies. From my perspective, during the 2.5 years I stayed at the United States, I noticed that Americans tend to have very well equipped with the knowledge of investment, but they tend to not have a huge savings. On the contrary, for Chinese people, they have huge savings, but they tend not to have the knowledge of doing investment. So, in your opinion, do you think is there any way that these two nations can form of a kind of joint venture or LLC of some sort to kind of make money together?
That's a very interesting question, and what he's saying is very true. Asian societies are great savers. India, the people in India, I've been told, save a lot of money. Americans seem to be kind of spendthrifts. We save a lot less. On the other hand, we have a very sophisticated investment system that's developed over the years in this country. I think that's interesting. Companies going into China, you obviously have governmental and regulation issues on how you can operate in some of these foreign countries. And sometimes it's not easy to go over and set up shop in Shanghai and start selling, you know, investment properties. The other thing you have is obviously the customs and language of the country to find out where the right real estate would be or the right investment might be. But yeah, I think there's an opportunity there that these people will want to invest the money. In Japan, I've been told they all go to the post office and they have these postal savings accounts. My guess is they're not making a lot on that, but that's the way they do it and they're used to doing it. There ought to be maybe the post office comes up with some approach where you could have more of a diversified portfolio and you wouldn't have to just put it into a 2% or 3%, maybe less savings account. I think that's an interesting opportunity. It's probably not a thing for Bergstrom Investment Management to deal with, but I think you know, the Fidelities and the Vanguards and these other major asset managers, I don't know why they wouldn't think about doing that. They've got the capital to do it, but they'd have to reach agreement with the governments on something that would be appropriate. Yes?
I have a question on how you spend your free time when you graduated college and like kind of what things you could do now to prepare yourself to be successful in the future.
Free time, that's always important. I've always been kind of an outdoor person, so I've always done, the hunting and fishing thing. I'm a lousy golfer, but I've enjoyed that in the past. I don't do too much of it now. Down in the Keys, it's boating and fishing. My wife likes to go on cruises, so if we're doing our thing, we go on at least one major cruise every year. Last year was a big year. My father was in Normandy in the Second World War. And so I'd never been to Paris before my wife had. So we flew to Paris, we saw the town, we went to the Normandy battlefields and saw all of that, very impressive. And then we boarded a ship and we went around the United Kingdom, Ireland, had stops there, and then we polished it off with 4 days in London. This year we're going to do Amsterdam to Barcelona. But we like to take one big cruise a year. We have grandkids now, so we have a lot of visitors down here. We go out to visit them in Colorado. So has it changed a lot? My wife would say I work too much and I travel too much, but I kind of enjoy it. So I'm trying to taper back and give my daughter a lot more to do, and she's willing to do it, and kind of release a few more things to her. So that's kind of my goal, and then just be able to take it easy and enjoy things. We've always taken vacations. I might sound like the guy that saves every last cent. We never missed a vacation. We had a summer place up in Wisconsin. When the kids were small, they learned how to water ski and fish and stuff like that, run the boat. And so we've always done that. And I would say that you need that to kind of recharge the batteries. I always come back from Europe or a cruise, and really, I love seeing what the other guy's up to, And it's usually some impressive things that you see, and different maybe than what you've heard. I've heard all the stories about Paris and issues. I got over there, we had a delightful time. Obviously the food is fantastic, but in general we were treated very well and really enjoyed seeing the city. So I think travel is a great way to go. John.
Working relationship with your daughter, how does that carry out? Do you have any challenges, or is it positive?
It's worked out very well, and we've been doing it now for 7 or 8 years. There's obviously an age difference. She's much more technology oriented than I am. She's trying to show me how to do things better. We still have a lot of files, a lot of paper. She thinks we can go paperless. I'm scared to death, of that. A lot of it is tax driven. I said, well, what if the IRS comes back and wants to know what we did on the trip to Las Vegas 3 years ago? Well, we went to the shopping center convention. And a lot of that is kind of self-imposed because we've never had a problem. So it's things like that, but we've never really had any fundamental disagreements. She, like me, we're equity investors. We like that. We don't mind taking risk as long as we can back it up with liquidity and cash. So it's worked out very well, and I'm delighted that I have something that I can hand off and go on the cruise. A lot of people, older guys like myself, have a hard time letting go, and we have to, and it's better for us to do it. And the new people she's brought in some great new investment choices that we've had, and they've worked out great. So I feel like she's getting the knowledge, and she's really contributing to the operation. I got something I called tips. I did this on the plane coming in from Key West yesterday. These are just things that I think make a difference. The first one is focus. I think the first time I was working for IBM, and I told you about the financial plan that Jack Bechtel was so proud of. So my part of I had all these properties that I was responsible for, so I had the budget responsibility of paying the rent, the utilities, all the operational expenses. So every year we had to produce a big budget on every single property I had. It was kind of mind-boggling. I put it off and I put it off, and I was going out to Cleveland to visit a couple of sites, and I brought the stuff along, all my budget stuff. So I get to the one hotel. This is like in the early 70s. Downtown Cleveland wasn't exactly Shangri-La. They had fires on the river, they had pollution issues, and one decent hotel to stay in, which I was at. Big snowstorm comes in. I mean, they dropped 2.5 feet of snow. And here I am stuck in the one hotel in downtown with the one restaurant. And so I have this bulging briefcase with all these budgets. So I sat down and I focused. I said, well, maybe I can use the time to really get this done. Before, there was always something that would interrupt me. The phone would ring, somebody would come in the office. So I sat down there in about 24 hours time. Well, I slept part of the time. I got almost all of the budgets done. And the big thing was I got started. So once you get started in something, it's easy to kind of finish it out. But the idea of focus, so many people they don't focus very well. They have too many projects going on and nothing gets done. So I've always felt that that's been one of the things that that I think I've done pretty well. Now some people will say, well, you're too focused and you're not watching something else, and there is a danger in that. But that's one tip. Really, the same area is take time to plan future planning. A lot of people are so caught up in the current situation, they don't have time to take a look and see what should I be doing a year from now. What are the things that I need to be thinking about with, in my case, different investments. We're going to reach a point where we're going to either continue on in this fund or go to a new fund, thinking ahead. And a lot of times you can come up with some great original thinking. I think I mentioned this before, but in job searching, everybody here, a lot of people have jobs already, others are in the hunt. Get started versus waiting for the perfect job. You don't know where you're going to end up, and doing something is always better than doing nothing. And I encourage people, get started, get out there, see what's going on, and then you can maneuver from that point on. I know a lot of people, they graduate and they want to go to Europe for 3 months, and then they do this and do that. All of a sudden, half a year has gone by or a full year has gone by. Now, going to Europe can be beneficial, and maybe you take a couple weeks off. But I like the idea of getting started, getting in the flow of things, and I think the people who hesitate don't help themselves. And the other tip is being a volunteer. You obviously have your family life, your business life, but look around for things where you can be a volunteer. And there's all kinds of things to do. You're probably doing some of that already. You can maybe take a greater role. You can look around in your communities for something to do. It's a great way to network. I know people that have joined, help out Boys and Girls Clubs, Boy Scouts, Girl Scouts, a variety of organizations. Great way to meet people, and I think you get a lot out of it yourself as well as you're trying to help people that are in need. So being a volunteer, I think, is a good thing to do. That's my tip list. Anything else? Yes?
For the first job, would you recommend us to try to find a job in a large company with company system, or to find a job in a smaller size company, but you can get the whole picture of the work you're doing?
I think what you're saying, the question is, what's the best strategy, big company or small company?
Yeah.
I would say either one can work. I went with the biggest company you could imagine, IBM. The advantage of somebody like a large company and the big banks, the big financial companies, a lot of the big REITs, they have a lot of structured training, and I think I benefited from the IBM. They sent me through a management school. I really wasn't managing anybody, but they gave me the background in it. And that's some of the advantages of working with a big company. On the other hand, a smaller company can be more of a ground floor. Equity might be available. A lot of family businesses are smaller, and they can be a very good place to land as well. So I think a lot of it is your feel for things and the opportunities that are in front of you, but either one will work. I've always placed a lot of emphasis in the chemistry with the people. When I switched from IBM, I left the security of the largest industrial company in the world to join JMB Realty with their 18 people or whatever it was. A big difference in the security. I didn't know whether they'd be in business in a couple of years. But I liked the chemistry of the players. I thought we hit it off. I thought my role was well defined, and all I had to do was, take charge and do it, and I would be supported. So that chemistry is a big part of it. Now, sometimes you can gauge that, and sometimes you can't. I know when I joined IBM, we were in a small group in Chicago, and I liked the chemistry of that group. I thought I could prosper in that environment and I could make a contribution. But either big or small, I think either one can work for the individual. Yes?
Looking back over your career, what are you most proud of?
What am I most proud of? Well, one of the things I'm very proud in is the real estate center here at the University of Florida, quite honestly. It was an idea that, I was there at the beginning, but there were a lot of other guys that we got together on a regularity. We sort of had a club, and we decided that we needed a center, and one of the guys was a lawyer, and he put together the articles, and the incorporation got us established legally. So I'm very proud of that. But I think on the personal side, I'm really proud of my family and the support that they've given me over the years, and I'm proud of being able to build the organizations that we built at JMB. Now it's less of an organization than it is an affiliation with all the people we do business with, and I really enjoy that relationship, and we're making money too, so it's kind of a double whammy. But building organizations and seeing the success. One of the things I did when I was at JMB, a small group of us got together and formed the National Multi-Housing Council. We celebrated our 40th anniversary, so that was 1978. There was probably 8 or 9 of us that got together and said, we don't want to see residential rent control in the United States. Where they have it, it's been a failure. It hurts the very people they're trying to help. And so we formed the organization around that, but it became really a great organization. It represents the owners, developers, and managers, and a lot of other people that are in the multifamily business. So I know when I was there for the 40th, I was really proud of how big this organization had grown. We had 5,800 people in Orlando, and when I was the chairman in 91 to 92, a big meeting would have been 300. So we've had that kind of growth, and obviously a lot more people than I were involved, but I really feel proud of how that organization has grown and prospered in the real estate industry.
All right, well, Kelley, we appreciate you spending time with us, and thank you for your leadership and your wisdom.
Enjoyed it.